Here is why you've got such a hard time making money. When you see this picture here and you tell yourself, had I just bought this cryptocurrency and everything would be fine. But really, the market is against you. The odds are against you. Most altcoins go down most of the time. And even that one cryptocurrency we looked at, Zcash, its chart is not particularly pretty. If you didn't time it right, you might have still lost 70%. While it was the best performing cryptocurrency on Binance in the last year. So really, this here is not the answer. But during the same time frame, there are also opportunities. There are charts like this, or like this, or like this, or also like this. And the reason why you never see anybody talk about those charts is because those positions aren't that easy to set up. So it's not just buying an altcoin. And that's why most people don't make money in crypto. They simply are not willing to learn enough. If we want to get outsized performance in any asset class, we have to know more than the average market participant. If we get into property, for example, and we are a property agent, we look at all the newly listed properties, we know how to fix up a property, we know where there's a good steal to be made, then we might outperform the property market. If we just look for our own house and we're not really interested in the valuation, etc., we probably just get the average return. The same is true for the stock market, right? If you do very deep research, you figure out what company is dependent on what other company, where is currently the momentum flowing, where might we have potentially a takeover. It's possible to outperform the stock market, but again, the vast majority does not outperform. The same as in the property market, right? The vast majority of people don't outperform the property market. The few insiders or the few people that really hone into the craft, they are able to outperform. And it's the same in crypto. If you just look for the next altcoin that might make a 10x, you're doing the exact same as everybody else, and so you're likely going to lose. Because all those 10x promises, they tend to become those red bubbles. And yes, there might be the one or two outliers, but even those outliers, they are extremely volatile. And they don't look like this, or like this, or like this, or like this. Now, what are those charts? This is my favorite way of investing in crypto, and it's not the common way. The common way is to try to find the next 10x altcoin. But really, most altcoins tend to go down over time, and that's because of token dilution. The crypto market is set up in a way that the early investors and the team, the project founders, they get new tokens over time. They get vesting unlocks. And those vesting unlocks are great for the people that receive those tokens. They can sell them off for profit, but they are bad for everybody else, for the retail investors that hold the asset. That's why everything is down. And that's a very significant effect in crypto. Every week, we see hundreds of millions worth of unlocks. On average, above 500 million, sometimes even above 1 billion. And when we are not in a hyper hot market, when we are just in an average market, like right now, there is not enough demand for all of those altcoins that hit the market. So outside of those very extreme market phases, it's a very bad idea to hold a diversified portfolio of altcoins. I actually think it's the same for the stock market. Most people tend to disagree. Most people say just buy the S&P 500 or buy the Nasdaq 100 and you will be doing quite well because you are diversified. But I tend to disagree here, because even for the stock market, if you didn't buy the S&P 500 but only the largest stock at a particular point in time, you would have made much more return compared to the entire S&P 500. So the S&P 1, the largest stock in the US stock market at a particular point in time, that's the blue line, and the S&P 500, that's the orange line. Most markets are structured like this. The winner takes most, and diversification does not happen within a market, it happens across markets. So you might have noticed this already in crypto, right? When Bitcoin goes up, most altcoins go up. When Bitcoin goes down, most altcoins crash. It's the same for stocks. When Google goes up, when Nvidia goes up, then everything else goes up as well. When those stocks crash, everything else crashes. So there's a lot of correlation. Things tend to move in sync, but that's only within a market. Across the different asset classes, that's not necessarily true. So just because tech stocks crash does not mean that the property market has to crash. It does not mean that gold has to crash. Diversification is achieved through owning different asset classes, not through buying many things within an asset class. Within an asset class, I think it's the best to just hold the best and then potentially, and here we go, bet on falling prices of the bad assets. And that's the key to charts like this. We want to bet on a rising Bitcoin price and on a falling altcoin price. What we see, for example, over here, that's the Bitcoin price divided by, in this case, the IOTA price. IOTA is an inflating cryptocurrency. It tends to expand its supply, so it tends to underperform Bitcoin. So when we open both positions at the same time, long Bitcoin, so we bet on a rising price of Bitcoin, and short IOTA, we bet on a falling price of IOTA, we get this resulting performance. Now again, this is not as easy as just buying an altcoin. It's a bit more complex, but it's worth the complexity. Because when we've got all of that correlation, when the assets tend to move in the same direction, and then for one position we bet on a rising price, for the other position we bet on a falling price, then the movements tend to cancel each other out. And so what we end up with is just the relative performance. How does Bitcoin, in this case, perform relative to IOTA? Now we can do the same for other markets as well. For example, if we are very bullish on Nvidia and we're not that bullish on, say, Disney, we could just bet on a rising Nvidia price, on a falling Disney price, and then capture that delta. Now I just came up with that example. Let's actually have a look at this. So we've got Nvidia. We divide this by Disney, and then we get this chart. Surprise, surprise. Let's zoom out a little bit more. This is since 1999. Of course, Nvidia did very well and Disney did very poorly. But any individual benchmark can never do as well compared to those relative valuation trades. Let's just compare the S&P 500 here. So let's have this as the same percent scale. Just have a look at this, right? There is no comparison. A relative valuation trade like this makes much more money. And so the reason why most people don't take advantage of this is, first of all, they might have never heard of it. They never learned about this. But secondly, even if they did, like you here in this video, there is still extra steps, right? You have to set up your margin account on, say, Interactive Brokers, or you have to set up a perpetual futures trading account in crypto, say something like Hyperliquid. You have to use a platform in order to bet on rising prices and falling prices at the same time. You have to learn about risk management, right? How can we potentially set stop losses? You have to learn about isolated margin, cross margin. There are a few details here and there is a learning curve, but that learning curve is worth it. It's the same for the example with the property market, right? If you want to beat the property market, you can't just buy a random house. You need to learn about the market. You need to learn about where can we get listings early. You need to learn about what are comparable prices. You need to learn all kinds of things. You need to learn financing. All those individual levers then make up the outsized performance. And the same for crypto. Don't expect outsized performance without having outsized skills. Because in the end, any market is structured this way. We've got the skill component and we've got the luck component. We've got both. We have to get lucky, but we also can nudge our luck in a certain direction with our skill. The expected value of an investment goes up as we learn more, as we've got more edge versus other market participants. And that's the thing that we can influence. The more we learn, the better we do long term. Yes, there is of course our luck component, but again, that luck cancels out long term. The reason why the casino is willing to offer the roulette game, even though in an individual game a player can make money, the reason why the casino still makes money long term is because the probabilities are in favor of the casino. And the same with active trading. Most people tend to lose, but the few people that are skilled enough that just cross the threshold, they are able to outperform. And the vast majority of crypto traders, they just try to find the next 10x altcoin and they get wrecked. The few people that learn about the structure of the market, that learn about token unlocks, that learn about relative valuations, that learn about margin, etc., they are able, if they do it smartly, to do better. And that's an important thing, right? We have to do this smartly because once we get more active in the market, there's of course also more risk, right? If we flip houses, we can also burn ourselves. It's the same when we flip cryptocurrencies. Many people that are not skilled enough, that suddenly go 5 or 10x levered on an altcoin, they get completely wrecked. But I don't think that's a reason to completely dismiss it, right? It's the same that we don't dismiss flipping houses. We simply have to learn enough. If we learn enough, then we can make money if at the same time we also have proper risk management in place. So there's a threshold to be made here, right? We want to have enough learning before we get wrecked. We don't want to have too much risk exposure and not yet have the experience to match that risk exposure. But yeah, there is outperformance to be made in crypto. Still, the vast majority does not follow crypto content anymore. The fact that you're still watching over here tells me something about you. You are contrarian. You are not like most others. You are willing to invest the time to get the higher returns. Hopefully. When the altcoin market sees unlocks of hundreds of millions of dollars every single week, and at the same time, more and more of Bitcoin's supply gets illiquid. So what we see over here, that's the Bitcoin that has not moved for the last 5 years. That's now close to 33% of the total supply. When we see that dynamic, then of course the altcoins in aggregate have to underperform Bitcoin long term. The same reason why playing roulette in a casino loses money, or why offering the roulette game as a casino wins money long term. And so that's fundamentally how the game works and how I have made money in the last 2 years while everybody else got wrecked. Now, similar to other markets, you can try to attempt this all by yourself, which I actually recommend if you're still young and you don't have much money, and you've got a lot of time, then learn the craft right now, because once you've got more money, right, once you've sold more time, you've saved more money, your experience is already relatively high. And then once you deploy more capital, you won't have too much of a mismatch. But if you don't have time to learn the craft, if you're already at the stage where you just want to deploy capital passively, then there are also options to do that. I don't want to talk about this too much in this video, but there is a new platform called Bitcoin Strategy Autopilot. Currently, there are 2 strategies live. One of them is capturing stock funding arbitrage. The backtest gives 38% per annum. Currently, we just launched on the 4th of August. We already collected 46%, so we even collected a bit more than expected. There's a bit of a drift. It's a bit more complex. Again, outsized performance doesn't come without taking the time to learn about the investments. There's also, and that's a new vault that just launched recently, an oil convergence trading strategy. So we look at 2 different oil prices, how they diverge, and then we bet on it converging again. That has a backtested return of 26%, and roughly a quarter of its capacity has been filled so far. So that's everything for Autopilot. That's available for the premium members. You can try out premium for free for the first 7 days. Link is down below. The most important takeaway from this video though is don't try to find the next 10x coin, right? Investing is not gambling. We want to just grow our capital long-term over time, and we want to take market efficiencies and turn them into long-term alpha, into long-term profit. Very few people are willing to learn the steps to make returns like this become a reality. Most people just chase the next pump and then potentially get wrecked. Markets concentrate over time. It's the winner takes most, not just in crypto, also in stocks and other markets. You don't want to diversify by owning 500 different companies, the same way you don't want to diversify by owning 500 different altcoins. You want to buy the best and then diversify across asset classes. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. Helps the channel grow. See you next time here on YouTube, or see you on Premium. Link to that pops up here on the screen. See you next time. Cheers.